Welcome back. Let's get into that market picture now out in the Far East, where Asian markets rose on Friday as Donald Trump struck what was an upbeat note on trade talks with China, while the pound held steady after British members of parliament voted to delay Brexit. Now, while there remain some concerns about the global outlook, investor confidence has, however, been supported by ongoing optimism that the world's two biggest economies will eventually hammer out a deal to end their long-running trade war. It was a day of green to end the week for Asia, as Tokyo's Nikkei gained 0.8% to close out at 21,450 points, 29,012 points for the Hang Seng, moving more than 0.5% to the good, and the Shanghai Composite moved beyond 3,000 points, ending the day 1% a little higher. Over to the United States now, where the S&P 500 also slipped on Thursday, unfortunately, snapping what was a three-day streak of gains as uncertainty over when a trade deal between the United States and China would be reached. That left investors on edge. So the Dow Jones Industrial was almost 8 points higher to sit at 25,710 points. The S&P 500 just going down 2 points on that front, closing the day out 2,808 points. The Nasdaq Composite as well dropping almost 0.2%, closing out the day there at 7,630. After a string of negative days, we're certainly seeing some positivity return to the market, especially locally, and it seemingly filtered through from that Asian market trade, bringing South Africa into that positivity as well. Around 0.8% gain for the JSE All-Share this afternoon as well. Perhaps a continuation of that will filter through into Monday. Not much when it comes to the results front, but it has been a busy week, of course, across the board. Let's check in on how the European markets are faring for now, and we'll get into the numbers in just a bit. $14.43 against the US dollar. That's the state of the rand right now. Yes, a bit of weakness, and of course we'd love it to have it a little bit better off. But I thought we'd unpack the week that was, of course, and the most important news seemingly has been that Boeing situation, and it just seems to have nosedived just a touch there. That share price, as we get the news, of course, of that Boeing 737 MAX 8 out in Ethiopian Airlines going down, unfortunately. That saw the share price go in a similar fashion there, around 16% just on the day alone. That scenario has itself weakened across the week, now to sit at around a steady pace there of $373 a share there. As you see, this little fall on this front over here just seemingly comes from President Donald Trump then deciding that indeed they were going to ground all of the 737 MAX 8s and 9s, which would certainly not help the price of the Boeing itself, sitting well above that 420 market, around $422 a share. That has fallen to around 373 as well, and could go even lower if the airline is put down for a longer period of time. But I thought we'd touch on just a few factors as to how many fleets across the world perhaps have the 737 MAX 8 in their fleet. And this is not even an exhaustive list. It is just a few of the ones that certainly have them, proving out then that the United States itself would suffer the most harm there. Southwest Airlines out in the United States is the one that has 34 of that 737 MAX 8 in their fleet. And you have then Air Canada sitting with a similar mark of 24 there, with American Airlines and China's Southern as well. The first three clearly indicates that North America is the ones that will suffer the most harm there if there's a continued and a long-standing delay with regards to the grounding of the Boeing 737 MAX 8. Let's remember, of course, that it is used more in short-haul airline travel as well, so it is one of those that will not perhaps hinder most of the movement. But here's more of the details and just exactly what will happen when the 737 does go down. It is the fastest selling aircraft in Boeing's history. As you can tell, there are 4,500 aircraft have been ordered by 100 different operators of the aircraft globally. 700,000 commercial flights this past week were planned. And it's quite interesting to note then, of that, only 1%, that's 6,548 commercial flights, would have then been operated by Boeing 737 variants. That is just how small it is in comparison to the scenario. As I said, there are 1% of global flights planned for the week. A maximum of 210 seats in the Boeing 737 MAX 8. It is used, as I said, there for short haul or domestic flights. SAA here locally and Mango do not actually operate the Boeing 737 MAX 8. Instead, Mango operates a Boeing 737 new generation, which is an entirely different aircraft there as well. So some interesting information with regards to that. We'll continue to see how that fares. But let's turn our attention now back to the markets, back to equities and just how South Africa's market has fared thus far. Of course, things haven't necessarily been that great this week. It has been pretty quiet, but we're still above that 56,000 point mark. The rand still weakening, as I noted a little bit earlier on. Let's chat to Warwick Lucas now from Galileo Capital. Warwick, thank you so much for the time. It's been an interesting week. We've seen a large number of companies sort of bring out earnings as well. What do you make of this week's movement, including international factors like Brexit and the like?
Yes, as you say, a very busy week, and in some quarters with company results, again, it was a case of bring out your dead. Some very, very sombering news there on the consumer front, certainly in the South African context. Brexit, of course, very, very noisy there. Still unclear as to how on earth that's going to pop out. Looks like the shoe is to some degree on the foot of the EU at the moment. Determining whether or not that extension will come through, but it looks like the path of least resistance right now, and I think it's frankly all that can be hoped for at this stage.
Going to be a difficult one for them to actually set out. Fine, let's go into the equity front. We had ABSA come out with earnings a little bit earlier on this week, on Monday in particular. The company itself is perhaps still trying to find its feet almost. It feels like it's a new bank that doesn't know where to go as yet. Yes, new leadership in the form of Rene van Wyk. There's interim CEO, the chief financial director, Jason Quinn as well. Seemingly an old head, but still trying to find direction. Do you believe that the bank is still perhaps going to be at the forefront of things, or are they slowly losing their way somewhat?
Well, I think they frankly lost their way quite badly under Barclays. I think it was actually a problem shareholder. I mean, they constrained risk on the book because of Barclays reporting requirements. And let's not forget, Barclays was in very, very deep trouble during the global financial crisis. And then that neuroticism got extended into ABSA for quite some time. So as a result, ABSA lost market leadership in both credit cards and home loans. And I mean, that had been a dominant position for many, many years. And there is quite a severe cost to losing leadership like that. I mean, getting it back is quite a fight, but I suppose we could say that also puts a bit of a growth opportunity back into ABSA's court. Yeah,
but it will be difficult to wrestle it away from the guys who have picked up most of it. Nonetheless, FNB, and of course that First Rand branch taking on a whole lot more market share. They've certainly banked on that FNB product to be the one that certainly spears them ahead, and you could tell by the results that FNB was indeed the creme de la creme of those First Rand earnings.
Absolutely, and very much on the front foot, and I think amongst the bigger banks, a technological leader as well. And I think as we can see more broadly, I mean, technology and finance is a critical blend. And FNB, no doubt, they're on the front foot there.
Yeah, would you see them sustainably staying ahead of the pack?
I think I would for now, simply because they are, it would seem, quite far ahead, and I think they have the kind of culture that's determined to stay ahead. Yeah.
Standard Bank then comes out with that announcement yesterday. A very difficult and hard pill to swallow on that front. 91 odd branches, over 1,000 workers to be laid off. It's expected, but still doesn't help the situation across South Africa's economy, does it?
Absolutely. I mean, obviously a bitter blow in the affected quarters. I think it also highlights, though, just to what degree technology has already taken over in banks. I mean, when you think about it, 90 branches and 1,000 staff, I mean, that effectively implies 11 staff per branch affected. So that either suggests that there are some homes already for quite a few of those staff to go to, but also how lean branches are actually already running compared to what used to be the case. And I think once again illustrates how technology is a critical determinant now in the banking space.
Yeah. Do you think that perhaps Standard Bank didn't have any foresight in this regard. And I only ask this question because we've surely been speaking about automation, digitization, all these buzzwords for the longest time now. And surely in the run-up to finally seeing that this is how the product would turn out, hopefully, that you would have some sort of strategy in which you could plug these people into to still assist beyond the automation process.
I think it's been a long ground-out process. I think the banks for a very long time have wanted to move away from bricks and mortar to clicks and only a little bit of mortar. Whereas branches used to be a drive strategy to drive market share and growth, they're very much now a reactive and almost in reserve service strategy for things like verification and some picking up of slack on service. But their biggest drive, no question, is being online.
Yeah. Okay. We have that story. Sadly, you know, it doesn't hurt, and it doesn't help, rather, should I say. We move into next week. There's still a couple of earnings results there. Nothing too major. But on the rand front, you see the rand has moved significantly from the mid-13s right through now to 14.43. And yes, it's happened over at least the last 2 weeks, but it certainly is disparaging to see the South African currency not hold up despite things like Brexit, despite, you know, the US economy not necessarily looking as good as one would have thought.
Yeah, I think the political narrative was quite bad-tempered this week, and I think Friday, today being an improvement, I think with a little bit from the precious metals, and I think a little bit of a reversion on the rest of the week, squaring ahead of the weekend. That's fairly normal behavior in markets. But yeah, I think a negative week typically showing what happens when you head into some fiercely contested elections.
Yeah, Warwick, really appreciate the time. But if you take a look at that business calendar, of course, you still have the South African Reserve Bank set to release some of its data as well. The MPCs want to certainly look out for. The inflation numbers are certainly set to come out as well. And also, if you head into next week, you may even have the unfortunate or fortunate news of a ratings scenario with regards to Moody's there. So we'll see exactly how things fare on that front. We'll continue to unpack it, of course, all for you here on Market Sense. This is On Point. Nzinga joins you right after this.